Go live this now. I'm live. I'm live. Go ahead and share this out with the I didn't bring my water back here. I won't be on long because I didn't bring my water. Y'all go ahead and jump over to YouTube. Anybody that's in here. First person that get in there, say I'm here. We say we here. The first person that get over there say we here, and then we're gonna go ahead and get into it while I finish setting this up. Who that is pulling up? I see somebody popped in there. Who that is? Yerp Kevo. What it is? What it is? What it is? What it is? Let's get cracking, man. Let me go ahead and finish. Make sure I finish setting everything up. Finish setting everything up, and we're gonna go ahead and get cracking. That screen. Yep, that's it. All right, all right, all right. Let's get with it. Let's get who we got in the building, man. Let's get what it is, Mike. Uh, Chris. That's a new name. That's a new name. What's up, Chris? I don't remember seeing that name. King Ellie. Okay. All right, y'all. Let's get it, man. I ain't gonna waste too much time. Partly because I don't feel like trimming this off. Let me scoot over so you can see the spider gang, spider gang. What we talk about, man? Risk management. And if you on IG, if you want to see the screen, pull up the YouTube. Y'all know how I go. I save it on YouTube. Everything gets saved on YouTube. If you want to see the screen, pull over on YouTube. Let's get right into it, man. What we talk about today? Today, I didn't save it. That ain't what we talking about. Let me put the right thing up there. Save. There you go. What we talk about today? Risk management. That's what we talk about today, man. And y'all already know what it is. Y'all see it at the bottom. Y'all see the banner. You know what I'm saying? Disclaimer. Y'all already see the disclaimer. I'm not a financial advisor. I'm not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. That's what the ticker say right down there. That's what it say right there. Hey, that ticker. But yeah, man. Risk management. Now, the way I need to taste, I took a mental trade. I took a mental trade at 423 put on SPY because I thought it would drop below Asian low. You thought right because I took an actual trade on the 423 SPY. We're gonna go over that, and I'm gonna explain how sitting here watching my trade, I choked my trade out because this been a real volatile week, and I let my emotions get the best of me, and I rolled my stop really, really tight. And 10 minutes after I got stopped out in profit for 29%, 10 minutes later, should I say, after I got stopped out in profit at 29%, it went and hit my target of 100%. 10 minutes later, if I would have just left the trade alone, I would have had 100%. Whereas I got 29%. A win is a win. But that's what we're talking about. What it is, Doc. Shout out Doc Nolan in the building. Risk management, man. Risk management. I hear a lot of people talking about risk management. I hear people what Lex said? I did worse this week. Lex, pull up. What Lex? I wonder if she in the building. If y'all on IG, hold on. I'm finna text Lex back. I'm about to text Lex back. I'm about to cut. I might cut this out the video. I don't feel like editing. Oh, tune in or pull up. Y'all want Lex to pull up? Tell Lex to pull up. All right. Okay. Okay, IG. If y'all still there, pull up on YouTube. All right. I might cut that out. But anyway, risk management. Risk management. I hear people talking about risk management, and you always, and I'm guilty of it too. You hear people saying, "Oh, I risk this amount on this trade. I risk 5% on this trade. I risk 20% on this trade. Um, don't risk no more than 5% of your portfolio. Um, don't do this right here. Don't risk that. Okay, all that's fine and dandy. You know what I'm saying? But Tim Rogers be needing it broke down. Y'all can ask little Timmy Rogers. Little Timmy Rogers tell you all the time. Little Timmy Rogers be like, what you mean by that, Tim? I'm glad you asked that question, little Timmy Rogers, cause we about to what's the name? I'm in the car, had to pick up my okay then. All right. Yeah, Lex say she gonna pull up to the chat. But let's get into it, man. I'm like I'm looking at squirrels all over the place, man. Looking at squirrels all over the place. So basically, I'm gonna give it to you, then I'm gonna show it to you. So my risk tolerance is don't lose no more than 2% of my entire um portfolio at one trade. Don't lose no more than 2% on one trade, right? And when you first like when Tim Rogers first hit that, I'm thinking, man, I can only risk 2%. You know what I'm saying? I can only risk 2%. I ain't gonna be able to do nothing. But you gotta think long term. With trading, with investing, you gotta think long term. It ain't about, you know what I'm saying, getting out there like Ken Griffey. Is Ken Griffey the one that hit the home runs? They're hitting the out there hitting the home run on every trade. It's all about risk management. Risk management is what you're gonna get you to glory. You know what I'm saying? So 2% is the max loss that I'm gonna win. I mean, I'm gonna lose on any trade, and that's 2% of my entire portfolio, right? So, but that doesn't mean that it's 2% on that trade, because when I go into a trade, I'm not risking my entire portfolio. You see what I'm saying? And I know it might sound confusing, but I'm gonna get you there. Bear with me, like you know how the preacher be like, just stick around. I'm gonna get you there. You know what I'm saying? You be, oh, you going with this preacher? Stick with me, right? So, I'm only gonna lose 2% of my entire portfolio on any trade, right? But when I go into the trade, I'm not risking my entire portfolio on that one trade. You see what I'm saying? So let's get into it. That's because I may be able to risk 20% on a trade, but that 20% that I'm risking is only 2% of my entire portfolio. So you got to manage the size that you're going into the trade to give it enough room to breathe, so that your stop loss ain't so tight you getting stopped out on the slightest amount of volatility, but your position size ain't so big that you got to have your stop loss so tight. So now I'm gonna show the chart, and I'm gonna show, you know what I'm saying, what I was looking at. As for, I actually took an options trade today. I didn't take the futures trade because it was right at time for me to clock out. You know what I'm saying? And I try to stick to my rules no matter what. It was time for me to clock out as far as trading futures, and I didn't take the future trade, but I did take the options trade. And I'm gonna go through. I'm gonna try to see if I can pull up on my platform. I'm gonna go into sim mode and see if I can pull up and show how I actually set up my options trade, and I will show on the futures how I determine my stop loss in ticks based off of the portfolio size, right? So let's share the screen, man. You running your mouth, Tim. Just get to it. Oh, if y'all can hear me, man, put a 1 in the chat if y'all can hear me good. Because sometimes, you know what I'm saying, I might be acting, I ain't gonna say that might be acting funny, but I be talking low and talking loud. But if you can hear me okay, put a 1 in the chat. Plus, I want to see who all done pulled up. But yeah, so here we go. And if y'all, you know what I'm saying, if y'all you like this, okay then, I see people, I see them ones, What's up? Here to learn and serve. I see you always pulling up. Kevo always pulling up. Um Oh, Antonio, you always pulling up. Prismo Pro, always pulling. Everybody, man, y'all some faithful viewers, man. Hey, share this out with the cousins who y'all think might need this here. So, which way am I looking? I'm looking this way, right? Get out the spider way. Spider on my shoulder. Check it out, right? So we looking at the let me make this. Let me try to fill up the whole screen so these counters will be a little bit bigger for y'all. I ain't used to looking at it on the whole screen. It looks funny like this to me. All right, so these 5-minute candles, everybody know how I pretty much set everything up, so I ain't got to go top to bottom, which y'all know most. Spider Gang know what it is. Y'all know pretty much what the lines mean, but just in case somebody just tuning in, I ain't gonna go back to the top, right? These right here are these, turn my arrows on. These the gold color lines, that's the high and lows that I'm watching to see if it's gonna make a run for liquidity around them high and lows. I marked this one way up here at the top because I think this might have been some kind of Russia news candle or something like that at like 6 something in the morning because the market shot up. So I'm thinking that was some kind of news candle. But after that, you see the market started selling off. So everybody know I'm still bearish on the market until we break this downtrend. So I'm looking for reasons to sell. You know what I'm saying? Because we're in a downtrend. So I don't like to buck the trend. So I'm looking for reasons to sell until we break this downtrend, right? Because I trade the SPY for anybody. Pull up on YouTube if you want to see the screen. Bay Street Trapper, youtube.com/the new TLR. Pull up on YouTube to see the screen. You can see the screen on YouTube. I don't show the screen on IG no more. I just be live on IG because that's where it all started with the Tim's Tidbits. You know what I'm saying? As far as what it is today. And so I still go live so the cousins that's only on Instagram can at least hear it. But pull up on YouTube and you'll see the screen and all that. And then subscribe too if you ain't subscribed. But so what was I saying? Prismo, what was I saying? Where was I at? I lost my train of thought. Here to learn and serve, here to learn and share. I know you know where I was at. What was I saying? Okay, so the lines. Okay, so I marked the gold lines on the 15-minute. I'll mark a swing low and a swing high that I'm watching before 8:30. This right here, this line right here, this vertical line there, that's my 8:30 line. So I marked the swing lows and swing highs that I'm watching that form prior to 8:30. This is the main ones because I marked the news candle wick just in case, but I'm more so looking for the range that we gonna be trading in because this is the range we traded in all night right here. So this was the swing low and swing high I was looking for, and I want to go short. You see what I'm saying? So based off of how we was trading, if you notice this green line right here, right? This green line right here, I ain't never tell y'all what's the YouTube channel. Go to youtube.com/the new TLR. If you got the YouTube app, I don't know how to. Can you click a link in the chat? If I put a link in the chat, do y'all know if you can click a link in the chat? I don't know if you can click a link in the chat. Go there, and if you get on, like if you go into YouTube, right? If you can search, I know if you search, I know, let me pin that right there. youtube.com/the new TLR. I know if you search The Adventures of Super Dad, it'll go to my page. Try to search Tim's Tidbits. I ain't tried to search that. I ain't been doing it on that long. So I don't know if Tim Tidbit will pull it up. But if you do it, Adventures of Super Dad, if you do the new TLR, if you just go to youtube.com/the new TLR, yeah, it don't show hyperlinks. Yeah, I don't think it show hyperlinks. But search like if you search The Adventures of Super Dad, it'll pop up. You'll see me If you try to search Tim's Tidbits, try to search the new TLR, but you know what I'm saying, pull up on them. And so when we this green, I don't think I've explained this green line to y'all because I ain't never showed it really. But what this green, you can it kind of self-explanatory. When we came when we started selling down, you know what I'm saying, we broke this swing low right here, you know what I'm saying? This kind of leading into that melting butter setup. You know what I'm saying? We made a high, we made a swing high, made a swing low, made a swing high, made a swing low, made a swing high, broke that swing low right there. When it trades back up into that, that's where I'm looking to go in. I didn't make up melting butter. I got that from the cousin Lex. Shout out to cousin Lex. So I saw the melting butter setting up, and then you see the fair value gap that I was watching right here. If you was watching my stories, I was walking y'all through this live. I was walking you through it live with my stories. So everything that you see right here, this is what I was doing live today. You know what I'm saying? This is my job. This is my job from 9:30 to 11. This is what I do. You know what I'm saying? 9:30 to 11. This I'm at work. So I was walking y'all through this as best I can with my stories. You know what I'm saying? And so the melting butter was setting up, but as you see, it was getting in my stories. I was saying how, hey, it's getting time for me to clock out. I ain't gonna be trading no futures, but I already showed how I had my options order ready to go. I had it already set up, ready to go, based off of what the SPY was doing at this time, based off of what the ES was doing. Because as you know, I watched the ES to make my options entries. Right, I'm gonna get to the risk management in a minute. I'm just breaking down, you know what I'm saying, my thought process. I gotta do this. Y'all leave me alone. Right? So um I I just saw something and got distracted. So when we broke this low, I was looking to make an entry right here. As you see at the on the 1045 candle, it still ain't hit. You see what I'm saying? And then where we hit it at, we hit it during this 11 o'clock candle. You know what I'm saying? So it was, I think it hit it like right around 1055. Technically, I could have taken the futures trade, but it was time for me to clock out. And because I was watching it on the 5 minute, it was time for me to clock out. And let me see exactly when it hit. What time did it hit the line? It hit the line on the 1055 candle. So technically, I could have taken the trade, but I had already clocked out for the day. But I had my options order staged. And now I'm going to pull up my other platform and I'm going to open, I'm going to try to go into playback, not playback. I'm going to try to go into paper trading version. Well, I could just go into my live account. I don't care. I go into my live account. This is my small account that I tell y'all I own. Now I'm a swing trader. For anybody that's new, I am a swing trader. You feel me? I am. Let me put it on just my face while I'm doing this right here. Right? For anybody that's new, I am a swing trader. I only swing trade. Forgive me for not looking at the camera. I'm pulling up my trade station. I only I primarily swing trade. I only day trade. Let me put in my password. I can't walk and chew gum at the same time. I only day trade in my small account, right? I only day trade in my small account. And I have a small account and I have a large account. My small account is for, you know what I'm saying, day trading and to continue to try to make a little extra money while I'm waiting for things to set up in my swing trade account. Because as it is, everybody know, as a swing trader, you have lows and highs. You got lows, highs. Like, I suck at playing puts, so I don't try to swing puts because I suck at playing puts. I will play a intraday put, but I don't try to swing puts because I suck at playing puts. So as a swing trader, during times like this right here, during downtrends like this, I'm sitting on my hands. So in my large account, I'm in all cash. I'm not doing anything right now. You know what I'm saying? I even let my long-term leaps get stopped out in profit because I saw that we was getting ready to make a, and everybody know that. Everybody know that. Everybody that follow me know that. Right? So let me put this over here on this screen so that when I share it, I can Open up my Option Stations Pro. I guess I could put y'all back on screen while I'm doing this. Okay, this is my trade station. It look like a lot going on, cause it is, but this is all this. I'm looking at the SPY. This is a daily chart right here. This is a 4-hour chart right here. This is just the management section. This is a 1-hour chart here, a 5-minute chart here, and a 1-minute chart there. It's like I just keep the SPY up there, and I can look at everything that it's doing at one time. I know it's kind of shrunk up, but you know what I'm saying, all I got to do is just zoom in. You know what I'm saying? I can just zoom in and see what's going on, so I can see what the day is red. Okay, what we doing in the last couple. I'm getting distracted. Let me get to what I'm supposed to be doing, man. Let me open up my Option Station Pro. Right, Option Station Pro is how you trade options in TradeStation. Right, so as y'all see, let me show you over here. So with this account right here, this is my small account. So in my small account, as you see, I come over here and it says that the balance is, the beginning of the day balance was 28.33, right? The beginning of the day balance was 28.33. You can see down here, realized today I made $63.20 because I choked my trade out. I'm explaining to you how I choked my trade out. And then, so all of that, the reason why I'm showing that and saying all of that is because it's part of the risk management that I'm about to get into, right? So that's the beginning of the day balance, right? So let's get into that part of it first. So remember when I said, can y'all see my screen, right? Y'all see my screen, right? Let me know if where would you stop profit been on that? Yeah, that's what I'm doing. Hey Philip, that's what I'm going through. I'm going through all of this right here we get into the risk management, but I'm walking you through everything so you see the total picture of how I do risk management. Cause a lot of times, like, I need to know the why. Little Timmy Rogers need to know the why. When somebody say I got 20% stop loss, then little Timmy Rogers gonna be like, hey, I got a question. And then I'll be like, what's your question, little Timmy Rogers? So I'm breaking it down. I'm showing everything. Right? So in the beginning, I was saying so we're gonna go 28.33, right? I said I don't want to lose no more than 2% of my entire portfolio. So at the beginning of the day, my entire portfolio was 28.33, right? So I'm gonna go 28.33, right, times 0.02, because that's 2%, right? $56.66 is how much I can lose on any trade in this portfolio right here. Because 2% of 28.33 is 56.66, right? So I'm not pulling hairs or nothing like that. So I'm gonna say $57, right? $57 is what I can lose on any trade, right? So remember that number. Somebody put $57 in the chat for me. $57 max loss. Somebody put that in the chat for me. So when I look, I'll be like, hey, what I said the max loss was, and I look back. Okay, so $57. Type $57 max loss in the chat for me. Right? So $57 is the max loss, because the max I want to lose on any trade is 2% of my portfolio. Now, here's the gag. You got to remember this. If you put on more than one trade, just say you want to put on 2 trades, right? My max loss is $57, right? So if I put on 2 trades, right, I got to divide 57 by 2. So now each trade can only lose $28.50 if I put on 2 trades. So that's why you got to look at the proportion, because the more you try to do, the tighter your stop loss gonna have to get. You see what I'm saying? The more you put on, the tighter your stop loss gonna get, because you dealing with the percentages. So if I try to put on a large amount of money, you know what I'm saying, my stop loss gonna be real tight. Remember that, right? So $57 is the max loss, right? So let's go in and look at what the SPY was doing around, cause everybody know. Well, if you don't know, when I'm watching the ES, right? I'm watching the ES, and when I'm marking these levels, right? So y'all gonna get a twofer. Y'all gonna get a twofer. Y'all gonna get how I watch the ES to make my options trade, and you're gonna get risk management. So you're getting a twofer, right? So dig it. When I mark up my chart, because I enter, I guess you could say, the way I enter, I wait for it to set up and then come back to it and then go long or go short, right? So here's the setup. You know what I'm saying? I'm looking at the melting butter setup. That's what was setting up for me. You know what I'm saying? We made a high, made a low, made a high, made a low. Well, start back here. We made a high, made a low, made a high. That's 2. Made a low, made a high. That's 3. Made a low. Right? When you went up, this right here broke this high. This right here broke this high. So that's 1, 2, 3 highs. This the melting butter setup that I got from Lex. 1, 2, 3 highs, right? This broke this high. It was a news candle, so it's radical. It broke this high, and then once it broke that high, it broke the swing low of this run right here. So that's the melting butter setup. 1, 2, 3 highs, break that high, and then when it come down on this leg right here, it breaks the swing low of this leg. That's the melting butter setup. And once it break that swing low, that's why I put that green line there. When it trades back up to that low, that's where you're looking to go short, right? Shout out Lex. That's who put me onto the melting butter setup. It's something that she learned from ICT, and she named it melting butter. So I can't take no credit from that. ICT and Lex, thank you. Right? So right here, now, this is when it's set up. Right here. Let's see what time that is when it's set up. Hit the wrong button. I need this button right here. Boom. Okay, so right there, I guess I can leave it on the arrow. So this is when it broke that low, and that is at, I need the line, 10:05. At 10:05 is when it broke that low on the 10:05 candle. So what do I do? So what you tell Tim, what you do? Lil Timmy Rogers, I'm glad you asked me that, Lil Timmy Rogers, right? So I go and I look to see what's going on at that time, right? What's going on at that? Oh, you know what? That I picked my entry based off this right here. I picked my entry based off this because I was looking at that first. I was looking at this for the trade first before melting butter set up for me, right? So that was it made that fair value gap at 10 o'clock, roughly the same time of day. So 10 o'clock and 10:05, it made that fair value gap. It's roughly the same time of day, so it should yield me the same price range, right? So we're gonna go. So now I'm not looking at the futures no more. I'm looking at the SPY. I'm not looking at the ES no more. I'm looking at the SPY. So I'm coming to 10 o'clock, 10:05 on the SPY, right? And if y'all on IG and you want to see the screen, come to YouTube. Okay, so here we go. 10 o'clock, 10 o'clock and 10:05. So this the 10 o'clock candle right here. This the 10:05 candle right there. So you got 10 o'clock, 10:05. And so at 10 o'clock, let's say 4:27 for all intents and purposes. It opened at 4:27. And at 10:05, it was like 10:25. So we're just going to use 4:27. Let's get, so when I'm doing my intraday, calls or puts, I shoot for 1% out the money as my strike. So 427 minus, because I'm going for a short, minus 1% equals, what just happened? Equals 42.20, yeah, so 423. 422.73. So 423. That's the strike that I went for. You know what I'm saying? That's the strike that I went for. So let's pull up here, and we're gonna this is Option Station Pro, right? Get out my way, calculator, because I keep peeking back at the screen and I need to see that. I put the calculator back. Okay. So here we go. And it ended up being a good trade, and I choked my trade out. And I'm gonna explain to you how I choked my trade out, because I was watching my trade. I use the only trades I watch are my futures trades. I don't like watching my options trade, because when I watch them, I start letting my mind think about how the week been going, and I go to moving my stop instead of letting the trade work. Anyway, here we go. So 423, right? This is the 423 strike. Anybody that don't know how an options chain look, to the left, you got calls. To the right, you got puts. And then in the middle is usually the strike prices, right? So right where the left and the right, like the dark gray, and I mean the gray and the gray on the left and the right where they meet, that's at the money. You know what I'm saying? That's at the money. So my strike is 423. So I'm gonna go over here and click on, boom, click on the 423. And if you all see how my charts changed in the background, because on Trade Station, when I click on something inside Trade Station, like let me click over here. See how the chart's changing? It's showing me that call now, because I clicked on the side in the middle. If I click on the right side, and now it's showing me the puts chain. You know what I'm saying? So this is the chart for that put, right? So what I do, I know my strike in my head. Boom. Now on the few, I know my strike. So I click the strike, because now I want to see what the strike is getting priced at. So in the futures, I'm waiting for when it's set up. I'm moving over here. Boom. This is what the chart looked like when it's set up. Right? It's still trading down. Let me make these candles bigger so y'all can see this good. This is what the chart looked like when it's setting up. You know what I'm saying? I know right around here, when it set up, the price was at 427, and I'm doing a 1% out the money strike. For 423 is my strike, and I know my max loss on any trade, any one trade, is what I said max loss was $57, right? $57 is my max loss on any trade. So I'm only taking one trade. So I know my max loss on this trade is $57, because $57 is 2% of my portfolio at the start of the day, right? So my max loss on any trade is 2%, right? And then, so here we go. I know I want to come to, and so now I'm going to look for the price I'm looking to pay when it comes back to this area, because the way the setup works is you trade up. Once you break this swing low, you want it to break it, and then when it trade, no matter how far down it trade, once it comes back up to this level, that's when you're looking to go short. So while it's trading down doing this thing, I'm over on Trade Station getting my options trade ready while it's trading. And how you gonna do that, Tim? Little Timmy Rogers, I'm glad you asked that. I'm gonna show you how I'm gonna do that. So back to Option Station Pro and Trade Station. So I look at the 423 put, right? So I want to look at the time when it's set up, and then y'all can see right there on the screen where I took four contracts there, and it's a stop market right here. I don't know if y'all can see that, but a little white dot, it says stop market, because I moved my stop. I got stopped out in profit, and then 10 minutes later, you see right over here, that was my 115 target. It hit 100%. If I'd have stayed in the trade, I would have hit 100%. I was watching the trade. I choked the trade out. I'm gonna stop talking about that. We talk about risk management, not stupid stuff that Tim do. Okay, here we go. So I want to go back and I want to look at 10 o'clock and 10:05. Tim, why are you looking at 10 o'clock and 10:05? I'm glad you asked that, little Timmy Rogers. You're a very astute student. You're very attentive. So at 10 o'clock and 10:05 is when my setup on the ES set itself. That's when it let me know this is a potential trade. It has given you this fair value gap to the bottom, right? It has given you melting butter. It has done what you thought it was going to do. When it trades back to this spot, you're going to go short, right? So at 10 o'clock, 10:05 is when it gave me the setup, right? So here we go. This is the 10 o'clock candle. I don't know if y'all can read that, but for the 10 o'clock candle, this strike price opened at 74 cents. It went as low as 68 cents, right? So at 10 o'clock, this is a same day expiration. The high, it opened at 74, the high was 75, and the low was 68, right? So now, when it comes, depending on how long it take for it to trade back there, it should be less than 68 cents. Why should it be less than 68 cents? Wait a minute, let little Timmy Rogers answer the question, not you, Big Tim. Why should it be less than 68 cents? I'm glad you asked that, little Timmy Rogers. It should be less than 68 cents because this is a same day expiration and theta is eating away at the premium. So if it comes back to a point, that same level at a later time frame, at a later time in the day, it should be less money because theta is eating away at the premium. And at the end of the day, the theta has to be 0 for an out the money trade. So the longer it takes to come back to that position, the less the premium is going to be worth. So when it comes back to this level, because it was trading at a low of 68 cents at 10 o'clock, right? That's when it's set up at 10 o'clock. So if it come back to this level at 10:10, the price should be less than 68 cents. Everybody tracking and everybody understand why. If you understand why, say yes, I understand why in the chat. If you don't understand why, I'll touch on it after I get finished, right? So now that I see that right there, I see how much it is. Now I'm saying, okay, it need to be less than 68 cents. So now I go into, I'm already clicked on the strike that I want. So I go into trade, right? I don't know if you can make it out because it's kind of small, but up here it's showing that I'm looking at the SPY 2022. Let me see how they do it. Okay, 2203 11. Yeah, so SPY is the date 2022 03 11. That's March 11th. It's a 423 put. So you got SPY, the date, a put, P for put, and then the strike price, right? So, and then I'm looking at, I say I'm going to get 4 contracts. Well, Tim, how did you come up with 4 contracts, right? So, what I did, since it was, the max loss was 57, right? What I did, right, I said, okay, I want to give myself room for this to breathe, right? So I'm going to start out to see if I go in there and try to get, 4 contracts, what's going to give me enough room for this to breathe, right? So if I go in there and I pick, well, let's just say I want to be greedy. It's going to be less than 68 cents. So I want to spend $600. I'm going to get 10 contracts, right? Let's see what that look like when your max loss is $57. So 57, you getting 10 contracts. So however many contracts you get, you got to remember 57 is your max. So 57 divided by 10, right? Your contract, your position can only take 5 cents of heat. a little over 5 cents. So it can only go down 5 cents. If you get in, just say you get in at 60, it can only go down to 55 cents, and boom, you getting stopped out, because that's gonna be your max stop for. So you can't be greedy. You got to remember position sizing. You know what I'm saying? You got to remember position sizing. So I'm not being greedy. I'm not gonna try to throw $600 at it. You see what I'm saying? So that 10 contracts ain't gonna work. So I said, okay, I'm gonna see what like it with 4. So 57 divided by 4. Boom. Now, with 4 contracts, this can slide 14 cent. It can go wrong 14 cent. Meaning, if I get in at 60 minus 14, it can drop all the way down to 46 cent before I get stopped out. You know what I'm saying? 60 minus 14 equals 46. 46 divided by 60. So that's 76. Okay. So 46 divided by 60. That's 76. Okay. So now let me do this right. 60 minus 46. 14 divided by 60. 23%. Okay. So I can risk up to 23% on this one trade because I only got 4 contracts on. So now that if I go into this trade with 4 contracts, I can risk 23% on this one trade. Now, if I go into this contract with, go into this position with 10 contracts, let's see how much I can risk on this trade. So 10, what was it? 57 divided by 10, 5.7. All right, so 60, let's say 60 minus 5.7, that's 54. 54 divided by 60, I can only 60 minus 54.3 divided by 60. I can risk 1%. If I had 10 contracts, I can only risk 1% on this one trade if I put 10 contracts on. That's why position sizing is so important, right? I can only risk 1% if I got it at 60 cents. That's all depending on what price you get it at. Now, if you getting it at a different price, you got to do this math for that different price that you're getting it at. So here we go. We're going to go in. So now I'm saying it's going to be less than 68 cents when it come back. So boom, I start watching it. And I'm waiting. While I'm waiting, let me show you what I do while I'm waiting. I go to trade. I decided I got 4. I'm going for 4 contracts because 4 contracts going to give me the opportunity to risk 20%. So I'm going for 100%. Right? And if I can risk 20% and going for 100%, that's a 5-to-1 risk to reward ratio. I'm risking 20%, 4-to-1. That's a 4-to-1 risk, 20, 40, 60, 80, 100, 5-to-1. So I'm risking 20% for 100%. So that's a 5-to-1 risk to reward ratio. I'm risking 1 to make 5. For every dollar I'm risking, I'm trying to make $5. 20%, I'm trying to make 100%. That's how I'm setting it up. So here we go. So we got 4, and if you see, I put the quantity 4. You see the strike. So what I do, this how you do it on my platform. Every platform, the button's gonna be different, but the interface gonna look different, but the strategy behind it, what I'm doing, the technicals behind it are the same. So on mine, you see where it say OCO and OSO. That stands for order cancels order and order sends order. That's how you do, OCO and OSO orders. Some platforms call it bracketing. Some platforms, I don't know. I ain't gonna try to think about everybody hit. So when I hit this drop down, right, I just want to go. I'm buying a put, so that means I'm going long. Whenever you're buying an option, you're going long that option. You're going long that put. You're going long that call because you're buying the position, right? So I'm entering a single long position, right? If you're going short an option, that means you're selling it. I'm not selling premium, so I'm going long. I'm buying the position. That's what long mean on options, right? Long for options don't mean you want it to go up. Long on options just mean you're buying the position. Man, y'all getting all kind of gems today, man. So these is all the different bracket types you can do. I'm getting 4 contracts, so I'm just getting all out. So I'm just going one limit. The limit is my profit target and one stop level. So I'm doing one limit with one stop market order. If I wanted to do a stop limit order, I would do one limit with stop limit, right? And I'll show you how to set both of those up. So what the rest of this is since I'm doing multiple contracts, how it says one limit, two stop levels, and then it say, well, I can have like multiple stop losses. And then where it says 2 limit, 3 limit, it's like I could scale out of the position, meaning I could set different profit targets on the, if I do the 2 limit, 1 stop, I'm gonna have 1 stop loss with 2 profit targets, right? And you get the gist of it. You know what I'm saying? 3 limit, you can scale out. You can scale out. And you can scale your stop too, right? So I'm doing a stop market. I'm gonna set up a stop market first, and then I'll show you how to set up a stop limit, right? So boom, I hit that there, and it opens up this window right here, right? It might look different on yours. I don't know if I can make this bigger. I can't make it bigger. Jolly pies, if you can't holler. Can y'all see that? If you can see it, say we can make it out. If not, I can see if I can maybe try to blow it up. I can't blow it up. I can't make it any bigger. I can't make it no bigger. I'm sorry. So I just make sure I say what it is. So the top line, the very top line up here, if you can't make it out, it's showing, it show you the symbol. It say buy to open, right? That's what mean going, that's going long. Say buy to open, you got your quantity. The order type is a limit because I'm setting a limit order. If I want to do a market order, I can get in right now. But so forget all this offset stuff. The offset stuff, I kind of understand it, but it confused me, so I don't use it. I just type my stuff in manually. The offset stuff lets you go in to say if it get, like if it move 5 cents up, you know what I'm saying? That's my target. If it, you know what I'm saying, you click it, if it go up $1.05, that's my target. You can, you know what I'm saying, you can set like the offset, like how you want to go. If it go down 5 cents, stop me out. I get getting confused, so I like to type mine in. So the limit price that I want to get in, I know I want it to be less than 68 cents, right? So I'm watching the time that it start getting close back to the setup, right? So we going through in time. You see how far down it sold? The farther down it sell on the ES, I'm thinking this premium should be getting less and less and less and less. You know what I'm saying? Because it's growing right now. The premium growing right now because it's going down. But I'm thinking about when it comes back up, it should be a lot less than 68 cents. The farther it go down and go getting that money right now, when it start pulling back, premium, and then see sideways action eating the premium up. See? So now I'm looking, I'm like, this is when I was like, man, it don't look like it's going to get back up here. But the melting butter and this was set up around the same time. So I'm willing to take it on either one of these. You see what I'm saying? So let's get back before it actually pop into it. Let's look at this. What is this right here? Around 10:45. Let's look around 10:45, 10:50, right? Because I'll be looking at this in real time. So I'm trying to play it back like as if it's in real time. So around 10, I'm out to cancel out of this. Can we see it here? No, we can't see it. I'll come back in there. Don't worry about that. Okay, so around 10:45, 10:50, right? We look at how much was it going. This is the okay, this the 1051 candle right here. At the 1051 candle, it had a low of 67 cents, right? At the 1050 candle, it had a low of 53 cents, right? It had a low of 53 cents at the 1053 candle, right? So at 1053, let's see exactly how close we was. I'm gonna have to drop down because the candle's not moving, so I'm gonna drop down in time to like a 1 minute chart. I go to a 2 minute chart. Okay, so at 1053, okay, so at 1052 right here, as you can see, we getting real close because the 1052 candle actually hit right here. It actually hit it right here. So boom, around this time right here, 1052, 1054. Now I'm setting up my option entry for real. Now I'm ready to go. Right? Because what I do, I'll set it and have it sitting there. Man, where's my Option Station Pro? Okay, I don't need Option Station Pro. Tim, you tripping. So what I'll do, I'll set it. I'm just getting the screen back up. I'll set it and I'll just have it sitting here and I'll just adjust it. So I already know I got the trade at 55 cents, right? That's how much I want to pay for it. I already know I got it at 55 cents. But let's just say I had it set at 60 cents, just sitting here waiting, right? My profit target, ignore this offset because you can just click in here and you can write in what you want. My profit target, I'm shooting for 100%, right? So I got 4 contracts, 60 cents, 100% is 120. Since I got 4 contracts, I'm thinking about, okay, it's going to be some contract costs on there. So I'll put in my profit target for 125. You know what I'm saying? Because 120 is 100%. I'm putting the extra $5 on there to account for I got 4 contracts and I'm about to pay like 60 cents per contract both ways, right? So that's my limit. The second line right here where it says the buy limit, that's how much I want to pay for it, right? And then when it comes to the exiting part of it, this is setting up my stop loss and my target. This is an OSO order that I'm doing right here, right? Order sends order. I'm doing it all at one time, right? So my limit, that's the price that I want to get to. You see what I'm saying? That's the price I want to get to. So I'll put in $1.25 because I'm getting it for 60 cents. I put in $1.25. My stop market, that's the price over here. The stop, see, right? The limit is what I want to buy and what I want to hit. And over here on the stop side, the stop, right, is I want that to be, so let's say 60. We're going for 60 cents. And then what did we said? The what's the name was? We could go 23%. That was 14. That was 14 point something. Let's just say 15. We ain't gonna split hairs on it. Right? 15, 45, right? So 45, I'm going to put 45 here because 60 minus 15 is 45, right? So 0.45, right? So now, boom, I got this set and I'm waiting, right? Let me break it down and walk back through it because I'm saying a whole lot, right? So my max loss on any position in the day is 57, right? It's 57, right? And we're just gonna round it up to 60 to make it easy. $60 on any one trade, right? So if I'm getting 4 contracts at 60 cents, right? My max loss I can take is 15 cent, right? 15, 30, 45, 60. Right? That's my max loss, $60. 15, 30, 45, 60. That's my max loss, $60, right? So 60 is what I'm paying. $15 from 60, I gotta get stopped out at $45, accounting for the spread. Now I can put in this $45 because the spread on spot options the same day are very tight. They usually like 1 cent. So I can put in the exact amount I want. If they had a wide spread, let's say if it was a 5-cent spread, if I want to get stopped out and lose no more than 45, I would need to put 50 cents, right? I would need to put 50 right there because it's a 5-cent spread. You see what I'm saying? I got to account for the spread on the stock market order. You know what I'm saying? If I don't want to lose no less than 45, if it's a 5-cent spread, I need to put the difference. I got to account for that spread, right? So I won't lose no more than I want to lose. All right, so now I got that set and I'm watching, right? When it started moving, I noticed, hey, I can get a better price. So boom, I want a better price. So I dropped this down to 55 cents. Boom, I went down to 55, right? Since I dropped that to 55, now my target is 110 for 100%. But I got my 4 contracts, so I'm gonna add that $5. So now, boom, I just change it to 115. And now that my entry is lower 55 cent, 55 minus 15, right? Now I could change this to 40 cent. My stop loss is 40 now. But Tim, why are you changing it? I'm glad you asked that question, little Timmy Rogers. I'm getting a better entry price of 55 cent. And so now my stop loss, instead of my stop loss being 45 cent, it's going to be 40 cent, because 55 minus 15 is 40 cent. You see what I'm saying? So, but now my profit target is 115, because 55 times 2 is 110. And I just add that little extra $5 on there because I got 4 contracts, right? Trying to make up for that money I'm losing on paying the contract costs, right? So boom, now that I got that set and I'm still watching the futures to see when it breaks my line, right? So boom, when it get up and it touch my line, boom, it touched my line. I'm watching this on the other screen and I hit right here, send order. Boom, I'm not going to send the order now. Well, I can click it, but it's going to ask me if I want to do it, but I ain't going to do that. I click send order. It pop up the verification screen, say, hey, do you want to send this order? Yes, I want to send the order. And then the order sit out there in the queue until I get picked up, right? And did I get picked up on this trade? Yes, I did. I got picked up right here on the 1056 candle. I got picked up on the 1056 candle. And as you see, I could have got an even better price because it went, I took a little bit of heat. Let me see, I got all the way down to 46 cent. So I took some heat. My stop loss was 40 cent. I got all the way down to 46 cent. And then it started going back up, right? It started going back up. Then it was like meandering around, acting like it wanted to come down. So it was like acting funny right around here. That was when it was getting around yesterday's close. And I'm like, is it going to be another fake me out day like it's been? Get around yesterday's close and take off. So then I moved my stop loss up to 60 cent. I moved my stop loss to here. I put my stop loss at 60 cent, right? And then when it came all the way up here to like 90 something cent, I moved my stop loss again to 70 cent. I moved my stop loss to 70 cent right at these lows right here. Right at these lows right here. I was like, if it come back to these lows, I'll just let it stop me out. And I left the stop loss there, right? So as you see, it came back. It stopped me out. You know what I'm saying? It stopped me out. I got a stop market price of 72 cent because I had it set for 70 cent. Once it got there, by the time the 4 contracts executed, the market had it bounced back up and I got out at 72 cent instead of getting out at 70 cent because it was, you know, whipping around. It went down. If I would have left it at 60 cent, I would have got stopped out here at 60 cent. But if I would have left it down there at 40 cent where it was, let's see what happened. It ran all the way up, and at what time is this right here? At 11:33. I don't know if y'all can see the high on that candle, but the high on that candle says $1.17. My target was $1.15. If I would have just walked away from the computer and let the trade play out, I would have hit 100%. I would have hit 100% on this trade. Well, Tim, how you know you would have hit 100%? Well, I'm glad you asked that. Oh, wait a minute, little Timmy Rogers. Well, Tim, how you know you would have hit 100%? I'm glad you asked that, little Timmy Rogers. Let me show you. I bought in at 55 cent, right? Right? So 115 was my target. My target was 115. 115 minus 55 that I paid, right? I paid 55 cents. $60 divided by what I paid is 1.09. And 1.09 is what? That's 109%. So I would have hit 109% with my profit target. And as you see, at 11:33, the high on that candle says 117. I got stopped that down here at 72 cent right there. That little dot there, I got stopped out at 72 cent because I moved my stop loss. But if I wouldn't have moved my stop loss at 11:33, I would have hit 115 profit target and had 109% trade for today. But I moved my stop. I choked out my trade. But the whole thing is about risk management. So I want to break it down to the way, how do I get out of here? I wanted to break it down on how I do the risk management with my options trade. Oh yeah, I said I was gonna do the same thing with the futures trade. How I do my risk tolerance with my options trade based off of my risk management. As you can see, I was risking 20% on that one trade, but that 20% was only 2% of my entire portfolio. So that's the key to it. You don't want to lose no more. Well, personally, per Tim Rogers, I don't want to lose no more than 2% of my entire portfolio on one trade. So I go into trades with a proportion size, well, a trade size, what's the word I'm looking for? It's not quantity, it's the, well, anyway, the trade size where I can have a larger risk tolerance. Because like I said, if I would have tried to put on 10 contracts, I would have only been able to risk 1% on that trade, which then that 1% would have been 2% of my entire portfolio. But since I only did 4 contracts, I was able to risk 20% on the trade, set up a nice 5-to-1 risk to reward ratio. So 20% of that trade was only 2% of my entire portfolio. And that was a nice 5-to-1 risk to reward ratio. And if I would have left it alone, I would have got the whole 5-to-1 risk to reward, but I didn't. So that's how I use risk management in the way of doing options. I know how much I want to risk on any trade. I watch the futures to look for my setup. Once my setup shows me a possible entry, I look to the SPY to find out what strike price I'm going to. I figure out what price I want to get that strike at when it gets back to my target. When the SPY comes back, when the ES comes back to, what's that? When the ES comes back to 42.6125, I'm going to buy a 423 strike for 55 cents per contract. I already know all of that because I done did it all ahead of time while the ES was still moving, and I'm setting up my trade, getting my entry ready. When it get close, as soon as it hit, boom, it hit. Wow, I fire. Set it off. It hit my point. Boom, I fire. It go. I wait for it to pick me up. Boom, it picked me up. The trade go through what it want to do. I should have walked away and let it keep running, but I didn't. So now let's look at it on the future side. So we're going to take that same, let's say our futures is set up with the same, what's the name? I ain't going to show you my futures account because you don't need to be in my business like that. But we're going to look at the same setup on the futures. We taking that same 2,800, right? We taking that same 2,800. Since we only got $2,800, right? Since we only got $2,800, we gonna only mess with the MES. We not gonna look at it for the ES because $2,800, that's enough money to trade the MES. Cause the MES, you need close to $1,300 intraday margin to trade. I mean, initial margin to trade one MES contract, and for intraday margin is $50 per contract. Yes, you can trade a ES contract with $2,800, but Tim Rogers not gonna trade it because you need close to $13,000 initial margin to trade one ES contract, and 2,800 is a whole lot less than 13,000. So I only trade contracts that I only trade instruments where I have enough capital in my account to cover the initial margin, right? So 28, we said 2,800, we said that was we said it was $57. So $57, we saying we was going with $60 divided by 1.25, 48 ticks, right? Your stop loss on any MES trade, if you got 28.33, whatever the margin, whatever the capital was, we said 28.33, we rounded it up to $60. So $60 divided by the tick value of the MES, which is $1.25, your max loss on any trade will be 48 ticks. You don't want to have no, and 48 ticks divided by 4 is 12 points, right? You can risk up to 12 points if you got 2833 in your account, and if you going with 2%, and that's 2% of your account on the MES. On the MES. Get that right. Now, if you want to be a big dog and trade that ES anyway, 48 divided by 10, you can only lose less than 5 ticks if you want to be a big dog and trade the ES anyway. So your entry gotta be so sniper perfect if you're trying to trade the ES with a small account and still have a decent risk management. If it, with doing 2% and you got 2833 of capital, if you put on an ES contract, you can only lose 4 ticks. You got to have a picture perfect sniper entry to have a 4 tick stop loss, right? But trading the MES, you can have a 48 tick stop loss. So grow your account, and once you, now if you got $28,000, now you can have a 48 tick stop loss on the ES. You understand? Because that's only going to be 2% of your account if you got $28,000. Now, so that's how you figure out your max stop loss on the MES or the ES. Depending on which instrument you're trading, you just look at your max loss that you can take on any one trade, right? Like we said, it was $60. $60 was the I ain't even showing the screen. Why y'all ain't tell me I wasn't showing the screen? Right? $60. Why y'all ain't tell me I wasn't showing the screen? So $60 divided by 1.25, right? Because it's $1.25 per tick on the MES. So that's 48 tick stop loss, right? If you got 2833, right? And we just rounded it up, because 2833 times 0.02, it was 56.77, and we just rounded it up to $60. $60 divided by 1.25 is 48 ticks. So you can risk up to 48 ticks, and you roughly in the 2% range. Now, 60 divided by 12.5, because it's $12.50 per tick on the ES. That's only 4.8 ticks. You can't get up eighth of a tick, so you can only risk 4 ticks and to be under your max stop loss. You can only risk 4 ticks if you're going to try to trade the big boy anyway with a $2,800 account, right? That's how you figure out what your max stop loss should be on the futures, based off of your based off of your total capital. Do we got any questions before I let y'all get up out of here? Do you got any questions before? Sorry if you, what I say? Put that up on the screen. Sorry. Oh, that's Kashaya. What's happening, Kashaya? Sorry if you went over this, Tim. But this morning, with that news candle, do you consider the candle when trading because you create? Nah, I mark it. Like I was saying earlier, I marked it. Like if you look on the chart, and you'll see it back in the playback when I touched on it. I marked this news candle earlier, but that was just in case the market wanted to do what it did earlier this week and keep trading up. But I marked it just so I know, hey, we getting back up to the top of this news candle. But I didn't think we was going to get there, because I went back and I marked off the lows and the high that I was really concerned with, and which was within the trading range that we had did overnight. This was the overnight trading range. So this was the high and the low that I was really looking at. But I just marked that, just, you know what I'm saying, because it was there. 4 points or 4 ticks. Ticks. I'm sorry if I said points when I was talking about the ES. If I said points when I was talking about the ES, this is ticks. So your max loss, if you got $2,800, we did the math and we rounded it up to say roughly $60 to keep the math easy. The max loss was $60. So for a MES contract, it's and I'm talking about the what's the name? I'm talking about this right here. They say Philip asked if it was points or ticks. So I'm doing it based off the tick value. So if you're on an MES contract and your max loss is $60, you divide 60 by $1.25 because it's $1.25 per tick. That will give you 48 ticks. 48 ticks converts to, if you divide that by 4, it's 4 ticks in a point. That's 12 points, right? That's 12. 48 ticks is 12 points. Now on the ES, $60 divided by is $12.50 per tick. That's 4.8 ticks. You can't get an eighth of a tick, so we're gonna knock that eighth off and say 4 times 1. You know what I'm saying? I mean 4 divided by 4. 1. You only got 1 point. You know what I'm saying? 4 ticks. If you're trying to trade the big boy ES with a small account, like with $2,800 in it, and you're trying to risk only 2% of your account, you can only have a 1 point stop loss or a 4 tick stop loss. That's why I say trade the MES, grow your account until you got enough money in your account to have at least $13,000 in your account. Because with $13,000 in your account, you can risk 2% of your account and lose 4 to 5 times on the ES before you drop below the initial margin that you need to trade one ES contract. If you have $13,000, you can lose 5 times, 2%, 2%, 2%, 2%, 2%, and still have enough money to trade one ES contract as far as initial margin. The intraday margin with a discount broker, you can trade with 500 like Ninja Trader, but I like to have enough margin in there to cover the initial margin. Why do you prefer trading spot options versus what's WS futures? I don't know what WS is, but I'm an options trader. I'm an option swing trader. I prefer to trade options. I know how to trade futures. Shout out Jay the Trader who taught me how to trade futures. Shout out P Dub who took my futures mentality to the next level. Shout out ICT on YouTube and P Dub for turning me on to ICT. You know what I'm saying? Like Jay the Trader, P Dub, and ICT just got me uphill with the futures. That's all I can say. I'm just an options trader. That's just what I do. I appreciate you, Kashai. Oh, ES. Yeah. I watched the ES to make my trades because the ES, the SPY, and the SPX, they all the same thing. They the S&P 500. I watched the ES to make my options trade, but today I didn't take my futures trade because I will day trade the futures, but I didn't take my futures trade because it was time for me to clock out. I get off at 11 o'clock from trading futures. I do futures from 9 to 11, 9:30 to 11. I clock in, I clock out. You know what I'm saying? Ain't no problem. Hey man, y'all shout out Here to Learn and Serve, man. When I tell you Here to Learn and Serve, be up in here supporting your boy. The other day, Here to Learn and Serve I asked for something in the chat. Here to Learn and Serve had a whole, like, the minutes. Had them took the whole minutes. It was like notes on top of notes on top of notes. When I think we was doing like checking the trend. Hey, ain't no problem, Kevo. I pre-Trey. Shout out Trey, man. Ain't no problem, Trey. That is the Trey I'm thinking about, right? The Playboy Trey, you the Trey I'm thinking about? If you the Trey I'm thinking about, say, yeah, this me, Tim. But if you another Trey, then be like, nah, I'm another Trey. Ain't no problem, man. Appreciate y'all for taking the time to pull up. We done been on here over an hour, man. I ain't expect this one to go that long. If y'all found any value in this, let me break it down so I can look you in the face, man. If y'all found any value in this, man, do me a favor. Share this with any cousin that you know. Share this with anybody, even if it ain't a cousin. Share this with anybody that you know, the rest of the Spider Gang, anybody. If you're not part of the Spider Gang, hit subscribe so you can get notified whenever I go live. Share this with the cousin. Hit like. Please hit. They told me hitting like helps on YouTube. Hit the like button for me. Press the like button right now. Whatever. Say if it where the like button at over here. Is the like button here? And I don't know if it's here or if it's over here. Whichever side. Hit the like button. There it is. Hit the like button. Here. Here. There you go. Hit the like. Let me get my fingers together. Hit the like button. Yeah. So hit the like button. Share it with the cousins. Shout out to everybody that I wanted to get to 500 subscribers. I thought it was gonna take me like a couple months. Y'all got me there in a couple weeks. We like over 700 now. Share it with the cousins. Tell the cousins, be like, let's get Tim. I got over 2,000 people. I got 2,000 cousins on IG. Let's get 2,000 cousins on YouTube. Share it with the cousins. Be like, hey, go to Tim channel and subscribe. Let's get Tim over 2,000. He got 2,000 subscribers he got 2,000 followers on Instagram. Let's get 2,000 subscribers on YouTube, because this where I'm putting all the videos at on YouTube. I go live just because that's where it started, but I'm putting all the videos on YouTube. Rewatch it if you have to. Share it with somebody if you have to. Okay then, Trey. Oh man, you know I'm getting old and sappy here to learn and share, man. I'm getting old and sappy. You gonna make me tear up, man. You gonna make me tear up. Hey, I'm finna get out of here before here to learn and share make me tear up, man. I appreciate y'all for pulling up for another lunchtime lesson. Again, go back and rewatch this, because risk management is the most important thing about trading and investing. I wholeheartedly believe that. I tried to break it down in a way that my mind can understand it. If I wasn't clear about it, just DM me on IG and be like, Tim, I still got questions. The cousins know I will answer DMs. I don't care, man. I treat this investing and trading thing like the gospel. I appreciate it, man. God is good and my wife is amazing. I retired at 48 years old. You know what I'm saying? I'm doing my wife last night. She said, I'm so proud of you. Not many people get to do what they love every day. And I love helping people, man. It's not about the stock market for me. I love helping people. That's why I don't charge for this. I appreciate y'all, man. Y'all share this with as many people as you can so we can all build this new Wakanda together. Anyway, man, till the next time, I'm gone.